The last topic in chapter 11 is other revenue. So to think about other revenue, we're just going to sort of look at some odds and ends items that we haven't really talked about and where they go in the income statement. Let's start with discount revenue. We learned that's when we get a discount from our suppliers or creditors. What about discount expense? Where would that go when we give a discount to our debtors? Interest revenue, we know about sales. Is interest revenue, is that going to go with sales or revenues as well? Interest expenses, is that just a regular expense? Where does that go? And lastly, a commission, an additional percentage charged on top of sales. We'll have a look at that in a little more detail later. Another possible thing that's come up in previous exams is rent revenue. Maybe we have another building that we rent out. Does that go with regular revenue or should it go in a separate category? So here's a table that's going to break it down. Discount revenue is actually going to go in a new section of our income statement called other revenue. So not regular revenue, which would be sales, this is other revenue. Discount expense, that's simply another expense, so that'd go in with your advertising, rent and wages and so on. Interest revenue, that's an other revenue as well, so that'll go in with your discount. Interest expense, however, that's just another expense. Commission revenue, that will actually go in our revenue section, so that'll go with our sales, and we'll look at exactly what commission is in a second. Rent revenue, however, that'll go in other revenue. So if you can, save this table or take it down and use that when you're preparing your income statements, because it's good at classifying what sections those items go in. Hence, basically what we need in our income statement now is another section called other revenue. How is that different to regular revenue? Well, regular revenue is simply the major source of revenue for a business. And what's it from? It comes from selling stock. It's the revenue we earn from selling stock. So that'll be our cash sales, our credit sales, and our commission revenue. That's different to other revenue. That's simply the revenue that's earned from any source other than selling stock. So a business does earn revenue from things that aren't actually selling stock. So for example, discounts. That's actually a discount gained from, a revenue earned from paying someone. It's not actually earned from selling it, it's just from paying someone back early. Interest revenue is another revenue. That's a revenue that's earned not from selling stock, it comes from investing. And lastly, rent revenue, that's another revenue because it's revenue that comes from renting out a building. It's a smart investment, so that's not going to be a regular revenue. What is a commission? So that's probably the one that's the most difficult to understand. It's an additional percentage charged on top of sales. So for example, let's say our business sells laptops. We buy them from the supplier and then we sell them to customers, and maybe the supplier, to give us an incentive, gives us $10 every time we sell one of their laptops. So why would they do that? Well, let's say that's Apple. We might sell many different brands of laptops. Apple wants us to sell theirs more than other brands, so they give us an incentive to sell theirs by giving us $10 every time. At the end of the month, we're going to have a whole bunch of commissions. So in this case, we got $1,000 of commissions. We sold 100 units for $10 each. That's going to be revenue, and it's revenue from selling stock. We did such a good job selling the Apple laptops that we earned $1,000 of commission revenue. So that's why a commission goes under the revenues section. So looking at the now complete format of the income statement, we've got revenues, less cost of goods sold, which we knew about, is gross profit, still the same. Here, less stock loss, add in stock gain or lesser stock loss to give us adjusted gross profit. Here's where it gets a little bit different. So now what we did was less other expenses. What we're actually going to do is add in the other revenues. So you can see for this business, there's only interest revenue, but that could be a discount or it could be rent revenue, for example. So that's where that section goes. Also note, we retitle sort of a new profit figure, but we don't give it a name. It doesn't really have a name. We don't need to give it one. We just know that it's $8,000. Now we finish off like we would. We go to less other expenses, and then finally that'll give us our net profit. So that's a full, complete income statement for Year 12 accounting. That covers everything that will go in it, and it's important that you remember that structure. So go over this overhead and make sure you know every section and the order in which it goes.